right? We will be discussing the basic concepts. Any doubt in the previous class? In the last class, we have discussed about the basic introduction, right? Now, what is the intent in the beginner's class? So when we talk about the beginner's class, we will be understanding certain concept at foundation level. Right, foundation level means, just 1 minute, I think there's some error. Okay, now it is fine. So we will be discussing certain concept at foundation level. Right now, these concepts that we are discussing at foundation level will help you to understand the chapters ahead better. Okay, so let's start. Audio and video, everything is perfect. Now, the first term that we are going to discuss over here is one-time investment. Now, what do you mean by one-time investment or series of investment? So, there are two words at present that we can see on our screen. One is one-time investment. The other one is series of investment, right? So, what do you mean by one-time investment or series of investment? Okay. Now, when you talk about one-time investment, so you must have heard about FD, and series of investment is example of RD. One-time investment is example of FD, and series of investment is an example of RD, that is recurring deposit. Now, what do you mean by this? One-time investment, that is the amount is invested in lump sum. And series of investment is an example of annuity. Right? Now, when you talk about lump sum investment, what does it mean? That instead of paying the amount for the once, sorry, instead of paying the amount every month or every year, we're paying that amount in lump sum. Right? What do you mean by lump sum? Money at one time. Money at one time itself. Like, for example, if I say, I invested rupees 2 lakh in one scheme. This is an example of what? For 5 years. Is this an example of one-time investment or an example of series of investment? So I have invested rupees 2 lakh in one scheme for 5 years. What is this? This is an example of one-time investment, lump sum investment. So this is an example of lump sum investment. Correct? Now, if I say I have invested in a scheme where I have to pay rupees 50,000 every year. What is this? This is an example of very good. This is not one-time investment, rather it is series of investment. Correct? I hope the difference is clear. So there are two situations, right? Either we can make the investment in this way, That is, I invested rupees 2 lakh for 5 years. This is one type of investment that I could do. Or I am investing rupees 20,000 every year for next 5 years. Correct? Now, in this case, 1, 2, 3, 4, 5. This is years. Every year, I will be depositing in this scheme rupees 20,000. Every year, I will be investing how much? 20,000 amount, right? So this is what here, whatever is written on the screen, this is not a one-time investment, rather a series of investment or series of transactions. And what are the features of it? Same amount or equal amount is invested every year for 5 years, again, which is a definite time period. Correct? This is an example of sorry, annuity. Is it clear to everyone? So the difference between lump sum and annuity will be that here the investment is done every year. So what would be the keyword? Whenever they're asking you a concept related to annuity, what would be the keyword? Very good morning, Divya ma'am. Tell me, it is a live session. Series of investment? No. The keyword would be every year. The keyword will be every year. Right? Is it clear to everyone? Shall we proceed ahead? So the two words that we have understood right now is lump sum and annuity. Right? Now, how to identify lump sum? Mr. X invested rupees 1 lakh, won in a lottery with, let's say, some excess bank at the rate of 10%. Now, this is an example of lump sum investment. Correct? So now we are not understanding the time value of money concept. Rather, we are understanding two keywords which you might feel difficulty with is annuity and lump sum amount. I hope both the terms are clear now. Now, moving ahead, there is one more possibility with the cash flow. Either the cash flow could be for lump sum, it could be for annuity, or it could be for perpetual. What is perpetual? Perpetual means infinite. Perpetual means infinite. What is the meaning of infinite? Like, for example, I invested 1,000 rupees in a prep bond. What does that mean? Now here, whenever the investment is perpetual or infinite, here I would receive the return for an infinite period. But I will not receive principal. Right? What does that mean? For example, if I invested rupees 1000 at a rate of 10% return, right? What will I receive? I will receive rupees 100 as interest. What will I receive? Rupees 100 as interest. Correct, for an infinite period. But I will never receive 1000 rupees back. Is it clear? Is it clear to everyone? So we have studied three terms over here. One is annuity, other one is lump sum, and the third one is perpetual. So there are perpetual bonds. If you remember, Yes Bank came up with this issue. Yes Bank, right, they have issued PEP bonds. So when you will invest in these bonds, let's say you invested rupees 10,000, right, in these bonds, and the rate of interest was 10%. So every year you will receive how much? Rupees 1000 till the bank continues, till the existence of the bank. Is it clear? You are not getting the principal back ever, Deepen. This 10,000 rupees you will never get back. The bank is not going to return this amount. So this is, for example, you take a loan, you are not required to pay principal, rather you're only paying interest. Is it clear? What is the use over annuity? I didn't get the question. Sharad, can you repeat your question? I didn't get that question. Now, meanwhile, you state your question again. I'll show you this. Now, can you see over here? Here there is an example of two things. Lump sum investment, right, and annuity. What is lump sum investment over here? Very good, very good. Excellent. So lump sum investment is you are doing the investment one time only for a longer duration of time. Correct? And what do you mean by the other one? Very good. So I think the concept is clear now. Annuity, you are investing the amount for a period of time. Correct. Every time, every year, same amount is invested or is received. Correct. Every time you are getting the same amount. I hope it is clear to everyone. Now the annuity also has two concepts. What? There is a concept of annuity due and ordinary annuity. Right? There is a concept of ordinary annuity and annuity due. Now what is the meaning of this? There are two types of annuity. Right? So one over here represents investment done at the end of the year. So understand it in this way. One minute, let me switch on that. Okay. So let's understand. No, you cannot withdraw the amount in a prep bond. If you withdraw the amount, then the concept or the definition of this or the purpose of this gets defeated. Nahin? So that is okay. Sharat, there are multiple investments. Now then, what was the need of doing a lump sum investment? Right. What was the need of doing a lump sum investment? Now understand, Sharat, in case of prep, the return, you might receive the return for 30 years, 35 years till the existence, correct? But maybe if you have invested in an annuity, you might receive the return for 5 years. You're getting the point, you're getting the difference. Debanjan, just wait for it, right? I'll tell you at the end. Is it clear? So it is the type of investment. You can invest on your part, thinking whatever is best for you. Okay? Now there is one thing. You can invest in a fund in two ways. For example, you can invest the amount at the end of the year or in the beginning of the year. So, for example, do you guys invest money for tax saving? Right now, there are two options. Starting from April, May, June, July, August, September, October. The same, let's copy it over here. April, May, June, July, August, September, and October. Correct? Now, you might invest the money in the beginning or at the end of the month. Now, for example, you have given your property on rent, right? The landlord, these are foundation classes to help you understand the basic concepts, Siddharth. Right? So, rent, okay, so you have a tenant in your house who's paying rent either at the end or in the beginning, and he's paying that amount directly in your bank account. He's transferring money in your bank account. So let's say if he is transferring the rent on the first day of the month, for example, as on 1st April, right? So if the amount is received on 1st April, you will start getting interest on this amount from which date? From 1st April itself, bank will start giving interest on this amount. So the amount that was invested over here will receive interest over here, second, third, fourth, fifth, sixth, six times interest would be received. Correct? Now, what if the rent was received on the last day of the month? That is on 30th April. Will you receive interest for this month? The amount is received over here. The first interest would be here, second, third, fourth, fifth. So that is the difference when you invest the amount in the beginning and at the end. If the investment is done in the beginning of the year, you will get extra interest. Right. And here, one less interest. Where the investment is done in the beginning of the year, we call it as annuity due. And when you do investment at the end of the year, we call it as ordinary annuity. Is this concept clear? Everyone. Correct. So annuity due is what? When the investment is done in the beginning of the year, and ordinary annuity is when the investment is done at the end of the year. So if the investment is done in the beginning, we call it as due. If we do it at the end, we call it as ordinary annuity. Correct? Now, Pooja, okay, I just removed the concept. There you were receiving the interest 6 times. So that, okay, if I deposit a lump sum amount, let's say I deposited lump sum amount in the bank on 1st of January. Okay, till March, how many interest will I receive? Tell me that. For how many months I'll receive the interest? 3, very good. 3 times, right? Same example, I deposited money as on 31st of Jan. Till March, how many interest will I receive? Very good, Pooja ma'am. 2 times, that is the difference. This is an example of annuity due. And this is the example of ordinary annuity. Is it clear now? Right? Why one less interest? Because here the investment is done in the beginning of the month. So you will receive the return of that particular month also. Here, because the investment is done in the end, you will not receive interest of 1st to 31st of January. Correct? This is annuity due. This is ordinary annuity. So here you will always receive one extra interest, and here you will receive one lesser interest. Correct? Now, sinking fund. What is sinking fund? So sinking fund, it was also there in JAIIB. It is also there in CAIIB, right? What is sinking fund? So right now I'm not explaining you the formula and I'm not asking you to solve questions. What I am explaining you is what is the concept and theory behind these concepts to understand the numerical better, right? Now, what is sinking fund? It is possibility, that at times we, we know how much amount we want after a certain period of time. For example, I want to buy a house, right? And or I saw a house, I really like that house, but I know I don't have funds right now, but I got an idea that maybe, if I want to buy a house, I need maybe 60-65 lakh rupees or 60 to 70 lakh rupees in order to buy a house, right? And I want to purchase this house, let's say, after 5 years. So I know after 5 years, how much amount of money I have to deposit. During this tenure of 5 years, how much amount I have to deposit? 60 to 70 lakh, right? So can I say that after 5 years, I will need rupees 70 lakh, correct, for buying a house, right? Now my question is, and I think that's a very normal question, when we are not financially literate. What is financial literacy? When we don't know how to invest in everything. So let's say if I'm not a financial literate person, what will I do? I'll come to anyone, I'll go and I'll ask a person who's financially literate that, if I want 70,000 after 5 years, what is the amount that I should start saving? What is the amount that I should start saving, maybe annually or monthly? Yes or no? Now you divided this amount saying 70,000 divided by 5, which is not correct. Why? I'll explain you. So when I am saving that amount, I will also receive interest on it. I am not going to just deposit it. I'll also receive interest. Is it clear? So I will receive interest on this fund every year, and the interest right now in the market works on the concept of compounding, right? Is it clear? So compounding will also be done on the amount, correct? So sinking fund is a concept where it tells that, let's say, if you want some amount in future, right, how much amount we should save annually, okay, how much amount we should save annually so that we can save the amount of our choice in future, correct? Now when I say I need, let's say, 70 lakh rupees after 5 years, is this present value or future value? This is future value. Any amount that you will receive, that you want in future or that you will receive in future, is called as future value. So here I know the future value, how much money I want. But what am I asking for you? What am I asking from you? I am asking you the amount that I am supposed to save every year. Now, don't you think this is very similar? Rajendra, it is an English medium batch. Your bilingual batch will start in the evening. You can join at that time, 9 p.m. So here, don't you think this statement, this theory matches to something that I taught you very recently? See, this is not a bilingual batch. The bilingual batch is at 9 p.m. in the evening. This is an English medium batch. You can shift to your batch, right? Or if you are in Mahapat, you have access to both. So you can join in the evening. Do you think this theory matches to something? Annual amount that we are supposed to save. What is that? Annuity? Very good, Balaji. This is the definition of annuity, right? So in the sinking fund concept, right, we will be saving an equal amount for a certain period of time, right? And on that we'll receive interest so that we can save 70 lakh for, we can assemble 70 lakh rupees after 5 years. Is this part clear? So see why this is important, because when you will be solving the sinking fund question, these will be the words that will be used. They will ask you what is the amount that you are supposed to save annually. What is the annuity amount? So whenever in the question they're asking you annuity amount and future value is given, I hope you will be clear with the concept. Everyone? Right? So sinking fund is clear. Annuity is clear. Then one-time lump sum investment is clear. Perpetual investment is clear. Right? Next one is NPV, net present value. What is NPV or net present value? Now, till now, we were discussing the questions like, let's say, year 1, 2, 3, 4, and 5. Correct? And here the amount of investment was fixed, like, let's say, 10,000. We were investing same amount every year. Same cash flow every year. Correct? But do you think, yes, Sunita ma'am, exactly. Whatever you need, 70 lakh is the future value. Let's say the value comes as 12 lakh that you have to deposit every year. This is your annuity amount. Is it clear, Sunita ma'am? Now, do you think every time in an investment, the cash flow would be same? Think about it. No, it could be variable also. So we are trying to analyze everything. What if there is, I told you, in case, so it is used in order to calculate the amount that you have to save annually so that you can reach to your future value. Sunita ma'am, if you want to buy something after 5 years, let's say 70 lakh rupees you need after 5 years, or 50 lakh rupees you need after 5 years, how much amount you have to deposit every year? You might say 50 divided by 5, that is 10 lakh, which is not correct. Why? Because the amount that you're depositing every year will also yield interest, right? So you will end up depositing, let's say 65 lakh rupees, but you needed only 50. Getting my point? So here sinking fund is used where you want to, where you want some amount of money in future for maybe buying an asset, for maybe buying a house or car or any repayment. You want to calculate how much amount you should save annually for that so that you reach to your desired amount after a certain period of time. Is it now clear, Sunita ma'am? Right. Now, there is a possibility that might be in the first year you receive a cash flow of 5,000. Next year you receive a cash flow of 15,000. Another year you might receive an investment of a return of 20,000. Here 35,000, and let's say 45,000. Is it possible? Correct. Now, in this particular situation, when the amount of flow is not same, what will happen? Time value of money won't, annuity amount will not work. Can we use the concept of annuity over here? Why we cannot? What is the reason why we cannot use the concept of annuity? Very good. Because annuity means same amount. Annuity means amount is same every year. Correct? Annuity says the amount should be same every year. Here, the amount is different because it is variable cash flow. You cannot use the concept of annuity. Correct? That might be available today because it was a holiday, Saturday, Sunday. I know I have received a number of requests with respect to that, Shelja. I'll discuss it as soon as possible I reach office, right? So this is what? Variable cash flow. Correct? What do you mean by variable cash flow? Where the amount of investment is not same, or the amount that is received as cash flow is not same every year. There what we will do is, this cash flow you will receive in future, right? You are investing some amount over here and then you will receive this cash flow which is future value, right? We convert it into present value one by one. Here, because the amount is same, in the case of annuity we can use one formula and we can solve it, right? But here when the cash flow is different in every year, we have to discount each and every factor or the cash flow that we are receiving so that we reach to our desired amount. Is it clear? Oh, congratulations, Saurabh sir. Everyone. So it is basically the difference. You will understand it better once we solve the question, right? So here, because we'll use the formula to explain you further again, but net present value is used where the amount of cash flow is different in every year. It's different every year. Is it clear? So possibility of all the types of cash flow we have done. Perpetual we have done lump sum, we have done annuity, we have done variable cash flow every year. So here, these are the major types of investment that we can do, right? Correct? Let's move ahead. Next concept, right? This is concept number 2. Abhi tak we were doing all the concept related to time value of money. This is concept number 2. Next time I'll write. Concept number 2. So this is Meera, right? She's a researcher. No, it is not Siddharth sir. She's a researcher. She has started her new research project, and the name of the project is How Stress Impacts the Life of College Students in India. Right? It is a new project. The project is all about how the stress is impacting the students, college students' life in India. Jasmine, I'll get in touch with the management for the same. Just let me write it. Take a Okay, all of you are not able to see my session of the previous class? Able to see. Jasmine, it is visible. Just check after 5-10 minutes. The class started a little late that day. Just check it like after half hour. Those others are able to see. Still, I'll get in touch. You know how to watch the recorded session? Live classes. Right. Live classes. 9th December. There will be the class and it will be written as watch now. So you have to watch that. Right. Okay. Now, and also let me get it checked once. With respect to your Mahapak request, right, all this will be updated maximum. So it was 2 working days, right? So today is the first working day, Monday, and max by Tuesday, right? It will be updated. Still, if it is not, okay, so if by Tuesday night, right, if it is not updated, you can tell me on Wednesday that it's not updated so that I can check on one-to-one basis. If Prashant sir, you're able to. Raja, I will get it checked as well. Jasmine, let me check once, right? And I'll come back to you. Tomorrow's class, I'll also show you these things, how to check. So this is Meera. She's a researcher. She has started for new research project. And the topic for the research is how stress impacts the life of college students in India. I'll tell that. Right now, let's read a little bit of concept. Okay, I'll just hide myself from the camera so that we are able to read everything properly. Now, so let's start with this. For her research, she will have to talk to each student who are studying in colleges in India. Now, we come back to the point. We are missing the main thing. Now, Meera, who's a researcher, she wants her research project, and the project name is how to analyze how that stress is impacting the college student. Now, when the stress is impacting the college student, how are we supposed to handle this? How will she analyze the stress? She will have to talk to the students. Yes or no? So she will have to talk to the college students. Agreed? To understand whether the stress thing is true or not. Right. So for her research, she will have to connect to each student who are studying in colleges in India. Right. But answer me, is it practically possible for her to connect to each and every student studying in college? Think about it. Is it even practically possible? And if it is not practically possible, then what would happen? Very good. So here comes the concept of sample or sampling. Because it is not practically possible for her to connect to each and every student who was studying in college, what she decided to choose few students on which she will be doing research and develop a finding. So instead of connecting to each candidate out of all the students available, let's say this is the total population of this is the total student, right? Total students studying in college in India, right? Out of that, right? Out of that, she has picked up few candidates, right? This is what? This is your population. Now, what do you mean by population? Population in case of stats doesn't mean the entire population. It means the relevant population. Is it clear? So here the population can also be the saving accounts. If the matter is with respect to bank, all the saving account will be what? Population. And the elements that are picked from the population or out of the population are called as sample. Is it clear to everyone? With respect to statistics, population has a different meaning. Population here doesn't mean only living being, it could be living and non-living objects. It could be bank saving account. Is it clear to everyone? And sample the elements that are selected out of total population. All those elements that are selected out of total population, they are referred as to sample. Correct? Everyone? Next. Statisticians use the word population to refer not only to the people but to all items that are to be studied. The word sample is used to describe a portion chosen from the population. A population is the entire group that you want to draw conclusion about. A sample is the specific group that you will collect data from. The size of sample is always less than the total size of the population. I hope this is clear. Right? So when you talk about population and sample, the word population in stats might be any living object or a non-living object, right? And the portion that is chosen from the entire population is referred as to sample. Correct? Next one. Now we'll come to concept number 3. Do you remember this? Seen somewhere before? JAIIB, right? So you've studied these concepts in JAIIB. Now these concepts are even covered in CAIIB, right? Accounting assumption. They're covered in CAIIB and at times, okay, and then it is not very important topic. It might come, it might not come. But again, it is your first chapter of module D. So analysis of financial statement in your module D, this is the first chapter, where you have to read about all the accounting assumptions. That is why I'm covering it over here so that we don't have to cover it in future. Right? So that it is covered in introduction. Now, if it even comes, we know it. If it doesn't take our major time. Now, what are accounting assumptions? See, accounting is a subject, right? And in order to understand this subject, or in order to make this subject equal for everyone, right? There are certain rules and regulations that are to be followed, right? These certain rules and regulations are called as accounting assumptions or conventions or principles, right? So when you talk about rules, there are accounting concepts. I'll write it over here. So accounting principles or rules or regulations are divided into two categories: accounting concepts or accounting conventions. Right? What do you mean by concepts? What are concepts? These are the assumptions. And what are these? Traditions. I hope this is clear. These are assumptions of facts or ideas. These are traditions, customs that we are required to follow every year. Right? Now, first we'll start with accounting concept. So I think you will only tell me about all the accounting concept. Number one, separate entity concept. Wait, I'll take you to the main slide. Now, business entity concept or separate entity concept. Now, what do you mean by business entity concept or separate entity concept? It said that organization, it will take hardly 10 minutes to revise these concepts. So separate entity concept always talked about that the organization and the owner are two different people, right? So organization and the owner are distinct from each other, and for the purpose of accounting, that to be treated separately as separate entities. Right, then comes the next one, money measurement concept, which said that for the purpose of accounting, we will only consider those transactions which are financial in nature, which can be measured or expressed in terms of money, will only be recorded in the books of account. I'll now stop here and ask you whether it is clear. Both these concepts? No, Sheila. Okay, when you talk about business entity concept, Sheila, it says that Reliance and Mukesh Ambani are the two same people or the different people? Reliance and Mukesh Ambani. So Mukesh Ambani owns Reliance, right? But the purpose of accounting, right? When we are doing the accounting, we will always consider both of them to be different. Now, let's say when Mukesh Ambani's daughter or son gets married, right? That expense, marriage expense, will be covered under business or will be covered from the personal expenses of Mukesh Ambani. Sheila. It is personal expense. That means though Reliance is owned by Mukesh Ambani, but again, they are two separate entities. Correct? That is what business entity says. It says that in business, when you're doing accounting, you don't consider these two people to be same. Now, when you talk personally, if I have a company, I and my company are same thing. I gave birth to that company, right? But again, that particular company is a separate legal entity. It is not same. Correct? So that's what the concept says about. Now, is it clear? Next one, money measurement concept says, again, for the purpose of accounting, you will record only those transactions which can be valued in terms of money. Now, for example, due to the ill health of CEO, the organization has suffered a loss of rupees, has suffered a loss. Actually, it could not be measured. It has suffered a loss, right? Can we record it in the purpose of accounting? How can you contribute that the loss of 1 crore is because of the same amount? No. So this is important for our valuable for our business information, but will we able to account it? We will not be able to account it, right? That is money measurement concept. That is one of the even disadvantage of accounting, that only those transactions can be recorded which are measured in terms of money, though the transaction is valuable and could be of major importance. But the transaction which do not have any amount involved are not recorded in accounting. Right, next one. Going concern concept. What is going concern concept? The going concern concept says that an organization will go on forever. Whatever the situation is, the organization will go on forever. Right? So the going concern concept says that the concept of assume that a business firm would continue to carry out its operation indefinitely and would not be liquidated soon. Now, this is a very legal, very basic thing. Understand it in this way. If you start a business, and if you are starting a business and you are thinking that, my business will not survive for more than 10 months or 12 months or 1 year, will you invest amount in that business? Slide is not clear. Is it? Okay, next time I'll take care of it. I'll keep white background. So the going concern concept, it assumes that a business firm would continue to operate for a longer period of time. Think in this way, that if you start a business, right, will you invest in business if you feel that your business has a very shorter duration of life? You will never invest. Now, if you know that your business won't survive for more than 10 or 12 months, why would I invest money and lose money? I won't. So in order to keep your business running, you need to understand that your business will go on forever. That is a thought or an assumption that we have in mind when we start our business. I hope this is clear. Correct? Then, now if I assume that my business will go on forever, right? I have assumed this, that my business will go on forever, but in order to measure the profits, the growth, the strength, the weakness, don't you think I have to do an analysis? I'll be required to do analysis. Correct? This, for the purpose of analysis, you will have to divide your accounting or your organization's life into certain period of time, which is called as accounting period concept. What is accounting period concept? It says that your organization will go on forever. It will go for 100 years. But in order to keep it sustainable, in order to analyze whether you're earning profit or loss, what are the strength, what is the financial position, divide your organization into a period of 12 months. What will happen with these division of 12 months? You will be able to analyze your organization, whether it is going in the right direction or not. I hope this is clear. Now, what is the tenure that we divide our organization into? What is the tenure? The tenure starts from 1st of April and ends on 31st March. I'll keep white background from the next time. Don't worry, sir. Is it clear to everyone? So it is a period of 12 months called as financial year. Correct? Everyone? So till here we have completed today. going concern concept, and accounting period concept. Correct? Okay, now just stay connected with me for 2 more minutes. Now, in case anyone wants to enroll for this batch, you can do it by clicking on the link. Right, you can enroll in this batch by clicking on the link of JAIIB Mahapack, and for the purpose of discount, 81% discount, you can use the code Y183. The link of the batch is given in the chat here. You can quickly enroll in it. I'll tell you the procedure as well. Now, so there are three options right now. You would have enrolled in this or this, right? English medium batch or over here. If you have enrolled in English medium batch, do remember the validity of this is 8 months and elective papers are not included in this. Right? So elective papers are not included in this. Right? English medium CIB, it has a validity of 12 months. Right? And here you will not only get live classes, but you will get 1 year subscription for unlimited live classes, revision classes, complete revision of the entire CIB course, plus case study of the entire course. Right? The recorded video will be available, Sunita ma'am, and you can save that. So, in case you have enrolled in this batch, you can also upgrade your batch. Right? I'll tell you. See, right now, if you have enrolled for this, for the elective, you will have to pay the amount. If you have enrolled in target batch, for the rest of the elective subject, you will have to pay this amount. That is totally 6298. Again, it's a target batch. The classes will be available for 3 to 4 months. Once the course is over, you will get the recorded videos, which will remain for the next balance validity. But in case you want to go for, right, in case you have to go for, or if you're planning to take, or you want unlimited live classes so that you can, do complete revision, you can enroll in CIB Mahapack. The discount code is Y183. Do not forget to use the coins. These coins are only available in Adda 24/7 app. I'll show you over here. This is important so that you get better discount. So you have to use the code and the coins. Together, when you will both use both of them, you will get the maximum discount, right? And today, if you enroll right now, the price will be 6,800. Correct? So the price will be 6,800 and you will get all the benefits. That will be, no, there is no direct login. You have to log in the app. Keep your app handy. You can, whether you are an iPhone user or whether you are an Android user, both the classes are available, bilingual as well as English medium. So bilingual class timing is 9 p.m. English medium classes time is 7 a.m. Is it clear, Varun sir? So today, if you're comfortable in Hindi plus English, you can join today at 9 p.m. Right? So in order to enroll, I'll tell you the process. Right? This is the features. You have all the live classes, unlimited access to the live classes, mock test series, video lectures of all the elective subject, revision batch or revision of complete CIB course before the exam, recorded videos which will stay for 1 year, ebooks, PDFs of the lecture, then numerical batch or MCQ batch only for the Mahapack candidate, case study batch only for Mahapack, and topic wise ebook question. Now, if you have enrolled in these batches, if you want to upgrade yourself into CIB Mahapack, right, you will be only required to pay the difference amount and you don't have to pay the higher amount. So you don't have to purchase CIB Mahapack, you have to pay the difference, whatever you have paid over here and the difference amount, right? And you can upgrade your batch into CIB Mahapack, right? In case you want to upgrade, I'll tell you the procedure as well. The video will be available after the class is over, within 24 hours. So in case you have not enrolled, you can enroll in it, CIB Mahapack or English medium batch. as the process I have told, and just give me 1 minute.